and concentrate on holding the properties. You know, it's not a race. Take your ego out of it. Take emotion out of it. You know, we're not like competing against each other. Like it makes no difference if I have, say, if you've got, say, 20 properties and I only have 10. Like, it doesn't really matter. It's like, what is our net position at the end of the day? And are we happy? Exactly, are we comfortable with that sort of that risk and that debt? So that's another thing to think about, because, you know, it's so easy to get overexcited and keep borrowing.
And even back in the day, like a $1 million property, for example, like let's call it 10 years ago, that was, you know, you had to live in the eastern suburbs to live in a $1 million property. Now you can live in, you know, the west of Sydney, for example, and live on a very derelict type of piece of land. And again, who's to say this is a smart investment, unless you've got future plans for it, you know, renovations and et cetera, adding value to the property. But one thing I was going to add as well there before with what you mentioned in regards to like buyer's agents, in this market, in this day and age, I think as investors, we have to be the smartest type of investor that's ever been around, especially in the Sydney Australian property investor market, because it's not as easy as buying a property, let's call it 30 years ago, for $150,000, which was probably a lot more affordable back then.
And probably cheaper than that.
Yeah, exactly. So to buy something back then for that amount, we'd call it a 10% loan because they weren't as tight. I'm not going to say it was easy, you know, because everyone had their struggles as well back then. But look, it was probably a lot. You were able to achieve that a lot quicker than what you are now. So to have the right buyer's agent, for example, with this market is, I feel, key as well. You know, like something that you mentioned, you know, with what we do. That's why I think it's good to see if you've got a buyer's agent that takes their time in in purchasing a property for you. That is going to be a major part of you making a lot of money in the long run, because I think we can be, especially our generation, you know, we can be, I guess, sucked into the bright light, you know, like whatever looks good on paper, and again, ego gets in the way. I bought this property for $800,000. It's a unit on the outskirts of the Sydney CBD. Like, all right, that's fantastic. How much is it going to grow? Yeah, it's probably going to grow a lot. But if the market crashes, that's forget how much money you might be able to profit. How much money you're going to be losing now. That's what really matters more than anything. You're going to be, if you're already working 6-7 days a week just to make sure that you can service this loan as is, what's going to happen if the market does rise in regards to the interest rates? If they rise, you know, that kind of puts you on a bit of puts you on the back foot in a major way, I think. But look, moving forward, there's from recent studies we've seen about 40%, I think it was, of economists saying, and expert economists saying that the market is going to rise, with 60% saying it's going to drop, I'm pretty sure. What are your thoughts on it, Zah? What do you think?
I guess addressing what you just first said about buyer's agents, how, you know, back in the day it was, you know, a lot more of a cheaper spend to get into the property market. I think now it's more important than ever to engage a professional to help you buy a property now, and you can't rely on sort of your own self-education and self-knowledge, and also relying on the real estate agent who's actually representing the vendor at the end of the day. Because, you know, a lot of people who aren't skilled in this area will end up getting ripped off. So now more than ever, you do need a property professional to help you purchase a property, because you're looking at a median house price of $1.2 million in Sydney alone. So, you know, and even good luck getting anything for 1.2
exactly.
Anyway. So, you know, like you want to make sure that you're buying the right product. It's almost like an insurance policy. So whatever, you know, the service fee is for a buyer's agent, you know, whether it's us or another buyer's agency, you know, there's so many good ones out there. It's definitely worth the spend, because it's almost like an insurance policy that you're buying the right product. Too many people rely on real estate agents or these property spruikers that work for developers who get paid commissions from developers, because, you know, they like dealing with those people because they don't feel like they're not paying them. But it's actually important to pay for the advice, because you want to make sure that you get the best outcome long term for your investment. What are my thoughts on whether the market's going to rise or fall? My thoughts are that as APRA come in and regulate the banks a little bit more, and with rates already getting hiked with the banks as it is, the RBA can't really go any lower on its rates. I think there is going to be some sort of correction within the market. But that doesn't mean that we're going to crash and burn. I just think that there's going to be more stock coming onto the market, so there will be a little bit more supply, because people are going to be looking at cashing in now, which will affect prices, because, as we know, supply and demand, if there's more supply, then it gets to meet that demand, and prices do get affected. But for the long term, property's great. Like it's never going to go down for the long term. We're talking 10, 20, 30, 40 years, we want to leave a legacy with property. So it's not an overnight success, and I think we must remember that things fluctuate, like in all businesses, and we just need to hang on for dear life if we can.
Fantastic. Well, guys, that's going to wrap us up for another episode of Grow Your Future. It's been great. Again, apologies for being sick. This is Mark Vittorian, Zah Asmi. Thanks very
guys.
much. Bye-bye.
Bye.